In recent months, the economic landscape has defied expectations, painting a rosy picture of progress. But as we look ahead to the next year, storm clouds gather on the horizon. At the Fall 2023 Stern Economic Outlook Forum, hosted by the NYU Stern School of Business, Torsten Selke, the chief economist at Apollo Global Management, issued a stark warning. He highlighted several lurking risks that threaten the remarkable recovery of the U.S. economy. These include the resumption of student loan payments, surging delinquency rates, and the slowing economies of America's trade partners. As inflation, partly subdued by 11 interest rate hikes from the Federal Reserve, shows signs of abating, it's tempting to believe the battle has been won without recession. However, Selke's insights cast shadows on this optimism. He points out that the Fed's rate hikes are indeed having the intended effect, curbing spending on homes, cars, credit cards, and even business investments. The question we must grapple with is whether these challenges will undermine the promising economic outlook we've grown accustomed to. Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button, leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. The recent economic narrative has been one of unexpected triumph, with the United States defying odds and forging a path to recovery. However, as the dust of celebration settles, economists are raising their voices in caution. Torsten Selke, a prominent economist, recently shared a sobering outlook at the Fall 2023 Stern Economic Outlook Forum, hosted by the NYU Stern School of Business. He presented a series of looming threats to the American economic resurgence that have largely gone unnoticed amidst the jubilation. Firstly, the once bountiful excess savings that households accumulated during the pandemic's early stages are rapidly dwindling. This spending spree, often referred to as revenge travel and marked by concerts and outings, is now giving way to concerns. The drop in savings is coinciding with a worrisome rise in delinquency rates, particularly among lower-income groups. This suggests that as savings are exhausted, the ability to meet debt obligations is under threat. Secondly, the resumption of student loan payments in October could place a significant burden on many Americans. The sudden financial responsibility could translate into decreased consumer spending, potentially affecting retail sales and broader consumer activities. Goldman Sachs estimates that borrowers may have to allocate an additional $60 billion to $70 billion annually for loan payments, a sizable dent in disposable income. Another concerning trend is the uptick in delinquency rates for credit cards and auto loans. Recent data from the New York Fed reveals an alarming increase in new credit card delinquencies compared to the previous year. As credit card debt reaches record highs, households with lower savings, lower incomes, and lower FICO scores are struggling to keep up with payments. Additionally, corporate loans are facing rising default rates, reflecting the Fed's efforts to make borrowing less attractive. This has immediate repercussions for both corporate and consumer spending. Interest coverage ratios for businesses, including investment-grade and high-yield companies, are declining, indicating higher interest expenses. This situation could lead to reductions in capital investments and consumer spending. The banking sector is also taking a cautious stance, slowing down new lending to both consumers and businesses. Since March, banks have tightened their lending practices, potentially impeding economic growth. Meanwhile, the surging prices of oil, as evidenced by the highest crude oil prices since November, threaten to translate into higher gas prices, impacting consumer spending further. Looking beyond American borders, there are concerns about the slowing economies of key trading partners, including Europe and China. Slower growth in these regions could have adverse effects on U.S. trade and exports. Additionally, Japan's shift in investment preferences, favoring domestic opportunities over U.S. treasuries, could exert upward pressure on U.S. interest rates. Long-term interest rates are on the rise, driven by factors unrelated to economic health. The Federal Reserve's quantitative tightening policies, coupled with the recent downgrade of the U.S. credit rating by Fitch, contribute to this trend. Lastly, higher interest payments for the U.S. government pose yet another risk. Projections indicate increasing estimates for federal interest payments as a share of GDP in the coming decades. In conclusion, while the economic resurgence in the United States has been nothing short of impressive, it would be unwise to dismiss the dark clouds of potential risks on the horizon. The question remains, can the American economy navigate these challenges and continue its remarkable recovery, or are we on the cusp of a less optimistic chapter? As we confront these economic uncertainties, what steps do you believe individuals, businesses, and policymakers should take to ensure the continued stability and growth of the U.S. economy? Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.